Okay, welcome back. So now we're just going to, for 10 minutes before we move on to questions, just talk about what's been happening in the gold and silver basis and co-basis. And this is a copy of the last gold basis service report. And you can find out all about the gold basis service on feketeresearch.com. Fekete Research altogether.com, and click on the gold basis service tab. Okay. So what's been going on? This was sent on last Thursday. So you can see that the basis for gold has been falling sharply, and the co-basis, this is the April contract, has been rising since the beginning of December, and it actually reached a backwardation as of Thursday. I think, Keith, it's still going higher, isn't it?
April is still moving deeper, but all the other months have reversed, and the co-basis has fallen, and the basis is rising now.
Right. People are panicking. Someone's panicking. So you can see that the trend is up, and this trend always happens well before the futures contract comes into expiry. And it's not a healthy sign. It's not a healthy sign at all. In fact, the last time, so in terms of sort of catching moves, I seem to remember that there was a lot of people saying that it's going to about 1200 here, and they were sort of looking at charts and their own I don't know, whatever they were thinking. They thought it was going straight down here. But if you looked, and it wasn't obviously the April contract then. Well, you can actually see it, the April contract here. The co-basis was rising as this was falling, but it was obviously, we were referring to another contract back here, the December contract, December 2011 contract. But you can see the same topology in the April contract, which back then was obviously not the near-term contract. Willie?
Sandeep, could you please explain the words or your definition for basis and co-basis for those who've heard those two words the first time?
Yes, I should have. The basis is defined.
Could you start on a fresh page?
The basis is defined as the bid on futures minus the ask on spot. So if the cash quote for gold is 1684 or 85, and the future is 1689.
Which future?
The near-term future.
The near.
Yeah, the near-term. It doesn't need to be the near-term, but I calculate.
That's the most interesting.
It is the most interesting, but you can calculate the basis over any spot versus future that you want. But the near term is the most interesting one. And let's say the future is 1689, 92. So the basis here is equal to 1689 actually, sorry, this is the carry. The carry is equal to this. Don't worry, it's just a technical term. So the carry is equal to 1689 minus 1685, which equals $4. And if you annualize this, we call it the basis. Okay, so you're comparing apples with apples each time you talk about the basis of a particular futures contract.
So assuming that this is, the difference is 1 month, the nearby, then...
so it would be, well, you take this as it's 4 divided by, and you use the midpoint of the cash price here. Although it's not particularly, it doesn't matter what your reference point is, but I just use the midpoint of the cash price. And then you calculate the percentage, whatever that would be, and then you annualize the percentage, okay? And the D carry...
Could you put a figure on this annualized?
I'll have to calculate it. So $4 divided by 1682.5 is 0.23 basis points. Okay? And let's say, just simple, 1 month future means that the carry is basis is equal to 2.85%.
And that's what goes on the chart, right?
That's what goes on the chart there. And the D carry is equal to the what is it equal to? The ask on futures.
No, the bid on spot.
Sorry, the bid on spot minus the ask on futures. So, bid on the spot, 1680, minus the ask on the futures, minus 1692, equals minus $8. Sorry, 12. Minus $12. And if you do the same calculation, well, it will be roughly sort of 3 times that, except negative. So it will be, well, let's do it exactly. So we have $12 divided by 1682.5, 71 basis points, and when you annualize the D carry, you call it the co-basis. So this implies the co-basis is equal to minus 12%. Or something of that order. And that's the other plot there.
The red curve.
The red curve.
Sandeep, if co-basis is rising, that means the market is becoming illiquid on bid and offer?
Not necessarily. It just means that you're getting a premium, you're moving towards the premium on the spot bid over the futures ask. Yeah.
You don't mean 12%, by the way, right? Is it 12 basis points or 12%?
I mean, no, sorry, yeah, it was 0.7, 0.7 times, sorry, it would be about -9%, roughly minus 3 times.
That would be a huge number.
Yeah, well, this is a silly example. So plus 2.5%, for example, here, and minus here. And if the gold market is normal, inverted commas, that's the way it should be. There's a premium for carrying gold, and in order to unwind that carry, there's a cost. So the cost is denoted by the negative co-basis. And when the
That's the normal. That's
normal. That is the normal state of a normal gold market, in as much as you can have a normal gold market under a fiat standard. So we can see there that, wow, look, you could have got a premium. It's only 4 basis points annualized, but the fact is that it shouldn't be there. It's on the screen, but okay. It's a premium that shouldn't be there. You should never, in the gold market especially, be given a premium to sell your cash gold now and replace it with a future. It just shouldn't happen. And a lot of people have said, well, that's because gold is so plentiful, etc., etc. Which is true, but the point is, though, that you have to consider the leasing element of gold at the moment as well. Not just the paper interest rate, but the gold lease rate as well. So gold going into backwardation is basically saying that you can't contain the gold interest rate. Okay, remember I said that when the fiat currency system was established, paper rates started competing with gold interest rates, gold lease rates, as they call it. Okay. And in order to keep the market in a state of positive positive carry, it's quite easy to do it. Because you can always, if the gold rate is whatever, you can just jack up the paper rate to above it, so that the market remains in contango. But what if your problem is falling interest rates? What if you want to decrease the interest rate? Well, you can keep on doing that, but there is only a limit as to how far you will be able to depress the gold rate of interest. That's what I was talking about before. Okay, so you infect the paper market by manipulating interest rates, and it naturally has a mirror image in the gold market. Exactly the same topology is being, exactly the same error is being induced on the gold market. And the sign of pushing interest rates well beyond below time preference will be the reluctance of the gold interest rate itself to fall. Because there is no one who can either offer gold to be lent, because it's already been lent out, or the rate is insufficient for anyone who has gold to lend it. But that puts a hole in the problem of wanting to halve interest rates into perpetuity, because it effectively means that the gold interest rate will remain above the paper interest rate, and the market will go into a permanent backwardation. Now, what this means for the futures market, it doesn't mean that you won't get your gold if you have a futures contract. if you have a 3-month futures and we enter a state of permanent backwardation, or I think it needs to be stricter than that, a permanently rising co-basis even, as opposed to a permanently flat and positive co-basis, then what will happen is they'll close the futures market down, and they will say that anyone that has a futures contract can have one of a few choices. You can either have it in cash, GLD, or a gold lease. So they will reschedule the payments to compensate for the fact that gold has been lent incorrectly. So you'll get your gold, but if you own a 3-month future, you might get it in 1 year's time, though, or 15 years' time, and gold now and gold in 15 years' time is not the same thing, but it's better than having nothing. You're not going to have a state, as many people think you will, that if you own a gold future, at some point it will be worthless. It will be worthless in as much and so far as a 15-year lease on gold is worthless.
They don't lease gold for 15 years, do they?
Yeah. Lots of Barrick borrowed gold for 15 years.
Oh, no, that's hedging. They call it hedging.
Yeah. So each time we see the gold... okay, and I didn't talk about silver. Is that later? Okay. So this is the silver co-basis March contract, and you can see it's at 1.5%, or it was at 1.5% on Thursday afternoon.
Back to zero today, by the way.
Is it?
Yesterday it went on the day.
Okay.
What's the red curve?
The red curve is the co-basis.
All co-basis.
And the blue curve is the December contracts co-basis. So you can see that March silver was actually in a backwardation, here, up until the end of January. Came down here and then started to go up again. So it's more obvious, this mechanism of a rising co-basis in the silver market than it is in the gold market. And the closing of the gold futures market would cause problems. It would not be a very pleasant environment when that happens. But it's not going to happen for a while, I think. And the reason is because if you look at how much silver came to COMEX warehouses over the past year, it was about 30 million ounces. So people are basically, they are selling cash silver and replacing it with futures. So they are being naive at the moment. And it's an awful lot of silver to come to the COMEX exchanges, 30 million ounces, in the space of less than a year. Okay, so this shows that people aren't being people aren't being concerned by silver being in a backwardation. They don't realize it's a function of having mismatched maturities in your silver leases as a result of the fraudulent creation of demand deposits. They just think it's for some other reason, like a normal commodity. And they're willing to sell their cash silver, which runs to the exchange, and replace it with a future. So, I don't know how long that...
Yesterday it's 0, today it's negative.
Okay.
Silver co-basis.
Well, it's expiring in what, 2 days or so?
Yeah.
So you're not going to... Sorry, you threw me there, Keith. I can't remember what You are having people who are willing to substitute their cash silver for silver futures.
They take the bait.
They take the bait. They think it's like a backwardation in copper or oil or wheat or something like that. And they'll say, okay, I'll take that little profit. I don't mind delaying the ownership of my silver. Don't forget, anyone that owns gold or silver keeps their accounts in gold or silver terms. So what's actually going on here is a fight between those people that keep their accounts in gold and silver terms and their accounts in paper terms. Okay?
Well, still far more people keep their accounts in paper terms.
Yes.
Very few.
Very
gold,
few.
Gold and silver.
Very few. So that 30 million ounces of silver have come to the exchange makes me think that we will come in and out of backwardation probably a few times before it remains permanent and closes.
But don't you ask yourself a question, are we really sure there will be permanent? Or this could keep on forever?
It could it could keep on forever, but ultimately it has to turn into permanent backwardation, because then you'll say,
either or, I mean, which one?
well, you can have this and then that, but I don't know how long this part will last.
So it can't go
forever.
No, this can't go on forever, but I don't know how long it will last. 3 years is forever in the financial markets these days. 1 day is sort of a long-term investment with most people, you know.
I have formulated this to myself. Don't you ever underestimate the tricks which Bernanke has up in his sleeves. Don't you ever underestimate, because it's almost inexhaustible.
I think that's a pretty safe statement there.
But it's not inexhaustible.
It's not.
It's just almost.
Almost. And at some point, you will want to make sure that if you did give your silver up, that very last time that that someone says, okay, I'll take that bait, sells their silver, buys a 1 month contract at a discount, they're not going to get their silver back in 1 month. They're not, and neither are they never going to get their silver back. Okay? Don't make that simple mistake. They just won't get it back after a month. They'll get it back after 6 months, or if lucky, you know.
Now please compare the two situations, the gold and silver, as you read it now.
Gold and silver, what? The ratio?
No, I mean...
so as I read it now, against fiat dollars, okay, you should be buying aggressively on any dips.
Which one? Both?
You should be buying. Whatever takes your fancy. But if you if you want to earn more gold ounces, I haven't got the ratio of the gold to silver bases on this chart. But the way that you determine which way the gold against silver ratio is going is by looking at the ratios of the code bases and the bases for these contracts.
You don't have a chart on that?
I don't have a chart on here of that. That would say that if you aren't in silver at the moment, you should be considering going into silver at the moment. But there's nothing definitive that says that you should be hand over fist in silver over gold. But I think that will make itself obvious probably in the next month or so.
You say the last several days, the bases have been turning bearish for both metals, silver more than gold. And so the ratios are moving towards gold's favor for at least.
Yeah, but I'd have to see a long-term chart, you know. I mean, 6-7 month chart to put that into context, you know.
It could just be a blip in the pan. No question.
Now, what about this? We have had silver backwardation almost continuously, but we didn't have gold. Now, all of a sudden, gold joined silver.
Yes.
So, what does that mean?
Well, if this was to occur, it would naturally, you said this, I think, Professor, so I'm just copying you, but it would naturally happen in the silver market first because it's
it's a guess.
Yeah, but it's being proved right. So, just because silver is a smaller market, and it still has monetary characteristics as gold does, you will make it more evidently, it will be more evident in the silver market before it's evident in the gold market.
But also, when I have said that, I meant permanent backwardation. Now, we don't know whether we are there yet.
Well, you can say that silver is doing this, but gold is sort of doing that, you know. So the number of times that the silver basis goes positive over a particular is greater than the number of times that the gold co-basis goes positive. You know, so that would be a way of measuring it outside of actually being in permanent backwardation.
So give us your best call. What will happen for the rest of the year? I mean, you know,
I don't make
speculative
speculative calls.
for that.
I think gold will end the year probably around 1963, maybe 1964. No, I think probably gold will end the year certainly north of its previous all-time high. That you can guarantee. I think it's pretty much guaranteed. And silver, I think, will outperform gold. Would have outperformed gold by that stage. You know, I have a view on the stock market, which is being proved correct, and silver has this correlation with the stock market for some reason. I think people like to buy silver if they see the stock market going up because it means more industrial demand or something like that. So gold-silver ratio down towards, I don't know, 35, 40?
What is it now?
51?
51.
And dollar prices, well, I only need to give the gold one, you can figure out what the silver is. Dollar, 2,500, something like that. Something like that. But this should not mean anything to anyone in here because they don't care about the dollar price of gold, do they? They care about gold ounces and how they're accumulating them, regardless of the dollar price.
Some of us accumulate gold ounces by trading against the dollar.
Yeah, but don't let that worry you, though. You know, Rudy.
Sandeep, would you consider this a psychological issue at the bottom line?
Yeah.
Gold is more money, gold close to the source, and silver is a little bit more industrial, a little more connected to, you know, conventional supply and demand, and not as dangerous or as scary as gold going into backwardation. That's the end of the world. This is still one step away from it. So maybe that's what's playing out, that this can happen more with less panic, let's say, in silver than in gold.
Yeah.
Okay.
Yeah, I would agree with that. I would agree with that. So I encourage you all to go to feketeresearch.com, have a browse around, lots of interesting articles there. I have a few of my patrons here as well, and the chairman of Fekete Research is behind the camera. So I think at this stage I'll take any questions, if there are any now. I mean, questions?
Or comments?
Comments? Misunderstandings, criticism. Criticism.
I have a question. This chart, let's go back to the first, the gold basis and gold basis. This if you look at the blue and the red, they are almost mirror or perfect mirror images of one another if you have the mirror horizontal line through the point where they intersect. Is this extraordinary or this is regular? The symmetry.
That they are that similar is just a coincidence in this particular
Near expiration it is happening, or?
Well, no, near expiration the mirror image will fail completely.
Fail completely.
Yeah, fail completely.
But it didn't fail here.
No, but this is an unusual. If I show you previous contracts, you know, it's not necessarily the case that you will see such a clear mirror image. I mean, you could have the basis falling and the co-basis not falling as much. You know, there are actually 10 different states that you can have, which I talk about in my thesis. But no, that is just, it just happens to be.
Is there any merit in trying to measure the deviation from the perfect symmetry and make some conclusions if there is more or less deviation?
I rather like to look at how it's moving between my 10 states rather than sort of looking at the geometry of it. But I don't think there would be.
Would you call this highly unusual or just mildly unusual? Or not unusual at all, this symmetry between the blue and the red?
I would say mildly unusual.
Mildly unusual.
Yeah. Mildly unusual.
Sandeep, this has continued for a long period of time.
Sorry?
This chart, if I have to go for different months. Have you observed this thing for different months running into the last couple of months?
Oh, yes, yes. I mean, my service has been running for over 2 years now. So there's 2 years worth of rigorous data on the subject.
This is near to the maturity always of the contract?
This one?
No, always you're finding this kind of...
No, not always. I'd say probably 25% of the cases it's well before maturity. So a quarter of the cases when it's doing this, it's well before maturity. Huh?
And other time it could be anywhere in the maturity of the property.
Yeah. Rudy?
Obviously, we're poking around to see if symmetry will more often lead to the backwardation than non-symmetry. That's what we're trying to pull out of this.
Well, ultimately, it can't. Obviously, it won't be perfectly symmetric. Ultimately,
Of course, but tendency,
But
As you get closer to expiration, the bid-ask spread of the future will widen, right? So as the naked longs, as I sometimes refer to them, who are speculating on futures, have to roll their future and sell it. The market maker doesn't tend to be as active, 3 days before the contract expires, when the open interest is down to 100 or 200 contracts. And so the bid-ask spread of the future will widen, and then you'll typically tend to see both the basis and the co-basis falling off the bottom. These last couple of ones where the co-bases have been rising until the end, maybe that's the new normal. We'll have to wait for a few more expirations to see.
Exactly.
Could you tell us about your fund? Or do you plan to start?
I can't really tell it to you unless you're a professional investor. But since we're all in a closed room, I have a gold. I'm a fund manager in London, and I have a gold fund that uses the basis as one of the inputs into determining when I should be in gold over silver, and that's for the vast majority of the assets of the fund, but B, when I should be looking to earn premium in the expectation of a price fall as an options writer. So the idea of this fund is to think in gold ounces, not in terms of, I know the nominal dollar value of my fund will go up year after year. That doesn't matter. What takes skill is increasing gold ounces under your per unit.
There's silver also in the fund.
There is silver in the fund. but the silver is used to increase the gold ounces, as it were. So it's like the working capital, as it were.
Okay.
So that was this was launched last week, literally before I got on the flight to London, to Munich. So if anyone is interested, you can speak to me afterwards. But
Well, this is not a promotion.
no, it's not a promotion, but you can speak to me personally afterwards.
This is really the first time that the basis and the co-basis is being tested in a market. Not paper trading, this is real stuff. You put your capital at, if there is a risk. We hope there is very little risk, right? But
So, we
so
might
that's a
have to...
historic moment, right? Because you just started that.
Yes.
And I don't think anybody else in the world is doing that, is there?
No, there's no fund which is doing what I'm doing in one fund, no. But we might have to erase that off the videos. I don't want the FSA coming
I don't have
in.
an eraser. This is not like tape. That
Luckily,
you
the
throw
British regulators are not as aggressive as the American ones, but if the tape ends up in the wrong hands...
They won't bother you until you make a lot of gold. Then you'll be above the radar screen, and then you've got to start taking some action, dodging them.
So I think any more quick questions? It's already 6:15, but if there are any questions, comments, or... Then I think that...
Well, thank you very much.
Call it a wrap. Thanks very much, everyone.